The Indian economy will remain the fastest growing large economy in the world and will drive growth amidst global economic slowdown. I'm not saying this. Instead, this declaration has been made by none other than the World Bank. The World Bank has also announced that its growth forecast for India remains unchanged at 6.7% for FY 25-26. In its flagship Global Economic Prospects report, the World Bank stated on India, quote, "The services sector is expected to enjoy sustained expansion and manufacturing activities anticipated to strengthen, supported by government initiatives to enhance logistics infrastructure and improve the business environment through tax reforms," unquote. In fact, even the IMF predicts India to remain the fastest growing large economy, followed by China, Russia, and the United States. However, all of these countries will see lower growth than last year, while those including Great Britain, Japan, and Germany will witness growth rate of less than 1%. Amid such global uncertainty and numerous reports of India's economic troubles going around in social media, the World Bank and IMF reports come as a reality check for all doubters of India's global rise. What will maintain the growth momentum in the financial year is the services sector. The report added, quote, "Investment growth is projected to be steady with moderating public investment offset by rising private investment," unquote. Meanwhile, advancement is also expected in manufacturing activity, aided by government initiatives to improve logistics infrastructure and business conditions through tax reforms. Private consumption is likely to rise due to stronger labor market, expanding credit, and improved rural incomes. However, it also points out that urban consumption in India has been constrained by higher inflation and slower credit growth. But in the year ahead, according to the multilateral lenders report, a strengthening labor market, expanding credit, and declining inflation are expected to rack up private consumption growth once more. But is it all rosy? What are the challenges and risks involved? Inderjeet Gill, World Bank's chief economist, asserted, quote, "The next 25 years will be tougher slog for developing economies than the last 25. Developing economies will need a new playbook that emphasizes domestic reforms to quicken private investment, deepen trade relations, and promote more efficient use of capital, talent, and energy," unquote. Intensification of protectionist policies, especially in the United States of America and Europe, are expected to downgrade manufacturing and other industrial goods exports, which could dampen growth prospects in South Asian countries unless a new understanding or trade deals are reached. Growth prospects could further be dampened by higher commodity prices for importer nations and tighter than expected monetary policy in response to more persistent inflation. World Bank's latest projections are in line with FICCI's Economic Outlook survey, according to which India's GDP growth for 2024-25 will be 6.4%, lower than 7% in September 2024. According to the Ministry of Statistics and Program Implementation 2, India's economy is seen growing at 6.4% this fiscal. Nomura forecasts a growth of 6.7% this fiscal, while Reserve Bank of India lowered GDP forecast for FY25 to 6.6%. Global brokerage USB Securities has shown some optimism and projected that the Indian economy will almost double by financial year 2031 to become a $6 trillion plus economy from the $3.8 trillion this fiscal. It stated that radical global policy shifts due to the new Donald Trump presidency could offer fresh opportunities like the China Plus One supply chain shifts to India in the medium term. Deloitte India's Economic Outlook report showcases India could be moving up global value chains contributed by a rising share of high-value manufacturing exports, particularly in electronics, machinery, and equipment. The report argued, quote, "India's demographic dividend and growing middle-class wealth are often celebrated for driving consumption demand and strengthening the labor market. But now we know they're also enhancing the stability of the country's financial markets," unquote. Remember, this is the first time in 4 years that India's growth rate has gone below 7%. It was 8.2% in fiscal year 2023-24. In fact, India's business activity during the month of January 2025 witnessed its slowest growth rate in over a year. But such fluctuations are expected amidst global uncertainty. At the same time, the manufacturing sector is showing positive signs. Pranjal Bhandari, HSBC's chief economist for India, told news agency Reuters, quote, India's manufacturing sector kicked off the year with strength as output and new orders recovered from a relatively sluggish third fiscal quarter, unquote. The manufacturing sector showed resilience with the PMI rising to a 6-month high of 58.0 from 56.4 in December. So can India maintain its crown as the fastest growing large economy in the years ahead? Leave a comment with your opinion, hit the like button and subscribe to Inconnect News.